If you've been following national and local news or have seen how much houses have been selling for, you know that there has been a lot going on in the real property market over the past 3 years. You probably also know that 41 of Ohio's 88 counties are conducting reappraisals and updates this year, which will identify how much property values have changed since 2020. And if you're watching this video, you're likely one of many Ohioans who has questions and concerns about how changes in property values may impact you. Hi, my name is Andrew Winkle, and I work in the Real Property Tax section here at the Department of Taxation. At the department, we know our fellow Ohioans have questions and concerns, so the tax commissioners asked me to help explain how your property taxes may be impacted by value changes associated with reappraisals and updates. To start, let's talk about the 3 key steps in the property valuation and taxation process. First, property in your county is appraised at its market value. After that, the second step is to assess the taxes approved by the voters and taxing authorities in your area. And finally, the third step involves each and every dollar of your real property taxes being returned to your local taxing authorities. Okay, the first step involves appraising property according to its market value. Both our state constitution and our state statutes require property to be appraised at its market value. To ensure that property is being appraised at its market value, county auditors conduct reappraisals every 6 years and updates which occur in the 3rd year in between reappraisals. During a reappraisal or update, county auditors identify how property values have changed over the past 3 years. Now, changes in market value are primarily identified by looking at sales data. And data from recent sales are the best evidence of market value. This is true whether you're trying to refinance your mortgage, sell your house, or appraise property for tax purposes. It also makes sense because the price the seller was willing to accept 3 years ago likely isn't the price the seller would accept from a buyer today. Okay, so here's an example. If recent sales data shows that homes in a neighborhood are selling for $250,000, and the auditor's current appraised values for similar homes in that same area is $200,000, that's an indication that homes are only being appraised at 80% of market value. Once an auditor has identified how much property values have changed over the past 3 years, they submit their proposed values to the Department of Taxation. Now, this happens because the department is required by law to review reappraisals and updates to ensure that property is being uniformly assessed according to its market value. It's an objective review that's based on data from hundreds of thousands of sales collected through a collaborative process with county auditors. The department uses standard methods to evaluate reappraisals and updates, which are applied consistently for all 88 counties. Think about it this way. Imagine that one county is assessing property at less than market value, another county is assessing property at its market value, and a third county is assessing property at more than its market value. That's not accurate, it's not uniform, and it's not acceptable under state law. If the data shows that a county that conducted a reappraisal or update has not assessed property according to its market value, the commissioner is required by law to increase or decrease values to ensure that property is being assessed according to its market value. It's important to point out that these findings have been exceedingly rare over the past half century. Much more commonly, the department and county auditors are able to coordinate and collaborate to ensure that property is being assessed at its market value. Okay, we've discussed appraisal, which is the first step in the process. Now let's shift gears and talk about the second step, which is assessment. To start, it's important to point out that the majority of taxes you pay were proposed by taxing authorities in your area and approved by voters in your district. Now, there are also unvoted levies, which certain taxing authorities can impose without voter approval. When values increase, these unvoted levies can result in tax increases and revenue windfalls for taxing authorities. Okay, so here's potentially the most important takeaway on the relationship between valuation and taxation. Even though you may experience sticker shock when you see a value increase due to a reappraisal or update, your taxes will not increase at the same rate as your property's value. For example, if the appraised value of your house increased 28% due to an update, your taxes will not go up 28%. This is because Ohio law protects taxpayers from many tax increases related to value changes. The first protection is what we call the assessment rate. Market value is the starting point for assessing real property taxes. A property is only taxed are assessed at 35% of its market value. This means that if your property had a market value of $100,000, it would only be taxed on $35,000. Additional protections come in the form of tax reduction factors and annual tax rate recalculations, which are designed to hold taxes and revenues stable. Tax reduction factors can be difficult to explain, even for a self-proclaimed tax nerd like me, but the impact and savings associated with tax reduction factors can clearly be seen on your tax bill. Additionally, most Ohio taxpayers receive several state-funded tax credits, which are automatically applied to reduce their taxes up to 12.5%. Like the savings associated with tax reduction factors, these state-funded credits are also listed on your tax bill. And speaking of your tax bill, let's talk about where your property taxes go. And here is another key takeaway. Each and every dollar you pay in real property taxes is returned to the taxing authorities that levy them. Your real property taxes fund local services such as schools, maintenance of streets, police, and fire. The state does not receive any of your real property taxes, and all tax revenue is returned to your local governments and taxing authorities. We, the department, really appreciate your time and interest in this very important process. Hopefully you have a better understanding now than you did a few minutes ago. If you want more details on how property is appraised, assessed, or when your county may be up for its next reappraisal or update, please visit the department's website, or get your phone out and scan the QR code provided. For now, thanks again for your time, and have a great day.